So one of the biggest myths in property is that you need a huge pot of your own money to be able to start building a portfolio, but you don't. You just actually need trust. Today I'll show you how we raised over £4 million in private finance. I'll show you the mistakes I made, what investors actually care about, and an example of a deal where we raised private finance in full for the project. And if you stick around until the end, I'll tell you about the biggest mistakes that people make in trying to raise private finance for their property projects. So let's start with why private finance exists. So most people think investors are doing you a favor by lending you their cash, but they're not. You're actually solving one of their problems, the ability for them to invest their capital without having to do too much by way of work. If you think about it, many successful business owners will have hundreds or even millions of pounds sat in their business accounts that's depreciating with inflation, earning almost nothing, and getting them probably frustrated with the lack of returns on that capital. They might have it invested in a high interest savings account or have lent it to the business for other purposes. But what they're really looking for is a solid return from a solid asset type that they know they can rely on. They don't want another job. They don't want to learn about property. They're more interested in just getting their money working hard for them, getting some security, getting predictable returns, and finding somebody competent who can manage their cash properly. And investors don't actually care about who you are. They don't care about your Instagram profile. They don't care about what car you have. What they really care about is if they're able to trust you. Have you done this before? Do you have any track record? Do you have systems? What deals do you have? Is my capital protected? What's the upside on this investment? What's a clear exit? What happens when things go wrong? And what's the backup security? Investors are usually pretty smart business owners. They're not here to invest in a particular property project. They're buying risk and looking to get a return on it. And in order for you to provide this to investors, then you need to become investable yourself. It's not something that you can just click your fingers and say, I am now investable. You need to do the work to become investable. And this is probably the most valuable bit of information that I can give you. You need to build out a professional shop window. You need to improve communication. You need to show your integrity. Ideally produce a track record, or if not, evidence of systems that you've built in order to serve them best. Proof of consistency, and ultimately honesty with them. Because once you have all of those things in place and you can build a relationship with somebody who has capital to invest, it's almost a no-brainer. Investors invest in people, not in businesses or projects. Remember that. Now, like I said at the start of the video, we've raised over £4 million in private finance. And I want to tell you about a project where we raised full investor finance and it didn't cost us a penny to actually buy, renovate or sell this deal. The property was a house in Cardiff where we were looking to convert it into a number of separate units. A block of 4 flats to be precise. We bought it for £300,000 and the GDV on it was around £750,000 on first look. We knew with the purchase and with about £180,000 worth of refurb, we'd need in the region of 500 grand to be able to execute on this project, and we knew that 750 grand was our GDV as a conservative bottom line estimate. On this basis, if we could hold 500 grand of investors' capital for a year and pay them 50 grand return, then we would be able to generate £200,000 worth of profit upon selling these assets. There were some other costs associated, including purchase costs, stamp duty, some architect's costs, and some sale fees. But ultimately, the investor loan covered the majority of these, as we saved a little bit of money on the refurb by value engineering the job. So when we first spoke to the investor, we set up about understanding what sort of capital amount we needed and where that capital was going to be spent. We'd already agreed the deal below market value, so he was buying into an investment that was 100 grand discounted already, which gives him an additional 100 grand security day one. We gave him a first charge over this asset. I think that was the most reasonable situation. And we also actually signed a personal guarantee against the asset and the refurb funds. They weren't paid up front. We did get a portion up front to be able to start works, but ultimately they were paid in arrears of works completed. So we really need to manage project invoices and make sure the contractor was aware that there was 30-day terms on his invoices. The investor was really happy with the setup. We had systems in place and we'd done this a couple of times before, so he wasn't worried. He'd seen that we'd executed on these projects and he'd seen our finishes and seen the projects sell into. The exit was always going to be to sell the 4 flats. There was an option to be able to refinance one of them and maybe keep them for the portfolio, but ultimately we were looking for generating profit on this deal rather than retaining them within our portfolio. We needed the profit to be able to go again on other purchases. The timeline for the project was 12 months. It actually ran over to more like 15 months with the sale, which is something I would recommend budgeting in a little bit longer, just in case the project spills over. Our good relationship and our communication with the investor meant that he wasn't stressed and the interest just rolled, so we ended up paying a little bit more in interest on the full capital amount. But ultimately, this deal was still really profitable and we exited in good time for a good amount. The result, we walked away with about 160 grand's worth of profit. The investor walked away with about 70 grand's worth of interest over and above his 500 grand. Within 15 months, everybody was happy with the project, particularly the buyers who were over the moon with the finishes on the 4 flats that we sold. Let's talk about where investors actually come from. And you don't have to have a rich uncle, and it doesn't have to be your best friend's dad. But ultimately, investors are rich people. So we do need to learn how to get in front of them. That's a really important part. But they can be made up of a bunch of different things. They can be business owners, they can be high net worth individuals, they can be people who've inherited lots of money, particularly in today's age when the availability of cash is everywhere and people show exactly how much cash they've got by lifestyle maxing and showing what cars they have, where they live, the watches they have, all those sorts of things. And social media as well. Social media is a place where people are starting to make a lot of money from, whatever else. And lots of these people have no appetite to learn how to invest in property and spend the time and effort becoming an investor or a developer, and they just want a return on their capital. So we need to think about how we can get in front of those people, how we can build trust, and how we can move forward and help these investors get a return on their own cash. It's also worth noting that you don't need hundreds of investors. 1 or 2 really good investors could set you up. I would say having, maybe 5 or 6 investors will keep you comfortable for all of your development projects for probably a very, very long time. Lots of my investors have come from contacts of previous. Some of them have come from socials, some of them have come from rugby and the history I have there. Lots of them have come from my previous consulting role, and some of them have just come from social media where I've connected with them, we've gone and caught up, we've built a relationship, and then now they become an investor in my business. In fact, one of our investors reached out to us when we were doing a project in the area and said to us that we like what you're doing with the project. We're interested in doing the same sort of thing at some point in our future, but for the time being, we'd be really interested in getting a return on some of our capital. And then we sat down, had a conversation, found out what worked for both parties, and now we have their funds for investment purposes. If I lost everything tomorrow, I'd raise private finance again. It would be the way for me to get my projects off the ground with very little capital of my own. I'd still have the relationships, I'd still have the credibility, and I'd still have the trust of the investors that I've worked with, and I've given them a return. If the communication level was there, and we could move them through a deal effectively, they would be more than happy to invest in me and my business again. Just remember, guys, with private finance, money follows competence. So if you're in the middle of trying to build a portfolio and you have little or limited capital, you might feel like money's holding you back. But honestly, I challenge that. Money is everywhere, and it's easily available for you if you set yourself up with the right systems to get a return for the investor. I would say that you don't necessarily have a money problem. It's more likely that you have a clarity problem, a networking problem, or a credibility problem. If you fix all of those things, then money will almost certainly follow. Now, I've put together the exact framework that I provide to my clients for not only finding and financing deals, but scaling their portfolio using private finance. If you're interested in seeing that, there's a link below where you can click to book a free discovery session and find out if we're actually able to help you or not. We can map out where you are and whether private finance and moving into scaling your property portfolio is right for you right now. Private finance isn't exclusively about finding rich people. It's about becoming the right person that rich people can trust. Thanks for watching, guys.